Hey everyone, welcome back to the channel. Today, we're diving deep into a topic that has the entire crypto world buzzing. The next Bitcoin halving, expected around 2028. Wait, 2028? I know the title says 2025, and there's a reason for that which we'll get into. It's a common misconception, and we're here to clear it all up and give you an expert breakdown of what's really coming. So, what is the Bitcoin halving? In simple terms, it's an event programmed into Bitcoin's code that cuts the reward for mining new blocks in half. This happens approximately every 4 years, or more accurately, every 210,000 blocks. This mechanism is what makes Bitcoin a deflationary asset, controlling its supply and, historically, influencing its price in a big way. The miners who secure the network and validate transactions get fewer new Bitcoins for their work, making each new coin theoretically more valuable. Let's do a quick history lesson. The first halving was in 2012. The reward dropped from 50 BTC per block to 25. What happened next? Bitcoin's price went on an epic run, soaring from around $12 to over $1,000 in the following year. Fast forward to the second halving in 2016. The reward was cut to 12.5 BTC. Again, we saw a massive bull run in 2017, with Bitcoin hitting its then all-time high of nearly $20,000. And most recently, the halving in May 2020 reduced the reward to 6.25 BTC. And what followed? The 2021 bull market, where Bitcoin smashed past $69,000. See a pattern here? Each halving has historically kicked off a major bull cycle. So, this brings us to the next halving. Why did I mention 2025 in the title? Because that's the year many experts believe we'll see the peak of the bull run triggered by the 2024 halving. The actual event is projected for April 2024, not 2025. It's a crucial distinction. The halving itself is the starting gun, not the finish line. The real fireworks, the massive price appreciation, historically happens in the 12 to 18 months after the halving. So when we talk about the 2025 event, we're really talking about the potential market peak resulting from the 2024 halving. This is the cycle that many investors are strategically positioning themselves for right now. Now, what will the next halving, the one in 2024, actually do? The block reward will drop from 6.25 BTC to just 3.125 BTC. This further tightens the supply of new Bitcoin entering the market. Think of it like this. If a gold mine suddenly announced it would produce half the amount of gold it used to, but demand stayed the same or even increased, what would happen to the price of gold? It would likely go up. Bitcoin operates on a similar principle of digital scarcity. But here's the million-dollar question. Will history repeat itself? Is another massive bull run guaranteed? Well, this time things are a bit different. For the first time, Bitcoin reached a new all-time high before the halving, largely thanks to the launch of spot Bitcoin ETFs in the United States. This has brought a tidal wave of institutional money and mainstream legitimacy to Bitcoin that we've never seen in previous cycles. These ETFs are buying up Bitcoin at a rate far exceeding the new supply being mined. We're talking about billions of dollars in inflows. This creates a massive supply shock. On one hand, you have the ETFs gobbling up available Bitcoin. On the other hand, the halving is about to cut the creation of new Bitcoin in half. It's a classic case of soaring demand meeting shrinking supply. This dynamic could potentially make the upcoming cycle the most explosive one yet. The demand from institutions like BlackRock and Fidelity wasn't a factor in 2012, 2016, or 2020. This is a brand new, powerful catalyst. However, we need to be balanced. There are also counter-arguments. Some analysts believe that the halving's effect is already priced in. The argument is that since everyone knows the halving is coming, the market has already adjusted its expectations, and we won't see the same dramatic price surge. They suggest the market is more mature and efficient now. Plus, global macroeconomic factors like interest rates, inflation, and geopolitical events play a much larger role now that Bitcoin is a multi-trillion-dollar asset class. A global recession, for example, could certainly dampen the effects of the halving. So how can you prepare? First and foremost, do your own research. This is not financial advice. Understand that crypto is a volatile space. A popular strategy for many is dollar cost averaging, or DCA. This involves investing a fixed amount of money at regular intervals regardless of the price. This approach can help smooth out volatility and reduces the risk of trying to time the market, which is nearly impossible. Think about your long-term goals. Are you investing for the next year or for the next decade? The halving cycle tends to reward those with patience. Beyond price, the halving also has a huge impact on the miners. With their revenue cut in half overnight, only the most efficient miners can survive. This could lead to a temporary drop in the network's hash rate as less efficient miners shut down their machines. However, the network is designed to handle this. The mining difficulty adjusts approximately every 2 weeks to ensure that blocks continue to be produced at a steady rate of about 1 every 10 minutes. Historically, the network has always recovered and become even more secure and decentralized over time. This forces innovation in the mining industry. Miners are constantly seeking cheaper energy sources, often turning to renewables and more efficient hardware. So, the halving acts as a stress test that ultimately strengthens the entire Bitcoin ecosystem, making it more resilient and robust. It's a beautiful piece of game theory designed by Satoshi Nakamoto. Let's recap what we've covered. The next Bitcoin halving is in 2024, not 2025. It will cut the new supply of Bitcoin in half, from 6.25 to 3.125 BTC per block. Historically, this event has triggered a major bull run in the 12 to 18 months that follow, which is why 2025 is the year everyone is watching. This cycle is unique because of the massive institutional demand from spot Bitcoin ETFs, creating an unprecedented supply shock. While history suggests a significant price increase, it's not a guarantee, and macroeconomic factors could play a big role. Remember to be smart, have a strategy, and never invest more than you're willing to lose. The crypto market is an exciting journey, but it comes with its share of ups and downs. Understanding the fundamentals, like the halving, is your best tool for navigating it. Thank you so much for tuning in and breaking down the next Bitcoin halving with me. I hope this cleared things up and gave you a solid framework for understanding what's to come. If you found this video helpful, please give it a thumbs up. It really helps the channel grow. And for more deep dives into the world of crypto, make sure you hit that subscribe button and turn on notifications so you don't miss our next video. Drop a comment below and let me know your predictions for the post-halving market. I'd love to hear your thoughts. Until next time, stay curious and invest wisely.